Hey folks, Dan Ferriero here with the rate update, where my goal here is to inform you guys of what's going on in the economy, the overall economy that's affecting the markets, especially the housing market, because I'm a mortgage advisor. So if you're looking to get pre-approved to buy your first house, or maybe you want to kick the tires, see what you qualify for, we'd love to help you. So we have in the news today right here, US GDP rose at 1.1 pace in the first quarter as signs build that the economy's slowing. So let's dissect this a little bit. Here's what the Federal Reserve wants. They want more and more people to lose their jobs because they won't be making paychecks. Thus, they won't be able to buy stuff. Okay, what happens? What is inflation? Basically, it's too many dollars chasing too few goods. So that's what the Federal Reserve is trying to do. I'm not saying I'm on their page, but that's what they're trying to do at this point. So we have data coming out today saying that the GDP is dropping. What is GDP? Well, let's get over to it so I can at least define it for you. GDP measures the monetary values of final goods and services that are those that are bought by the final user, produced in a country in a given period. So what they do is they take a time period. Let's say they take a month or a quarter, and they value things they figure out how much our manufacturing in the U.S. made and produced and how much was sold, and they compile those numbers. It's an amazing number, and they come back and say, here's what's happening. So what the expectations are is the GDP, so our national production is going to start slumping. What happens at that point? Well, more and more people lose their jobs. Okay, then what happens is they're not getting those checks, those big checks they do usually get. They're probably going to be now on unemployment, which is a fraction of what they get. So thus, they won't be spending as much. Thus, we'll lower our inflation. That's the thought behind all this. Okay, so let's dig into this a little bit more. We have those numbers there, but one number that also came out today was the inflation numbers, the PCE. Now, the PCE number I didn't think was coming out today because on our economic calendar over here, it tells me it's coming out tomorrow. So something was leaked or something's going on right now, but the inflation was higher than expected in the quarter, with the PCE price index rising 4.2% against where we were at 3.7%. So what the PCE index is, it's another inflation number that the Federal Reserve monitors, and they really pay attention to this one. Okay, why? I don't know, but this is the one they really pay attention to. So this number is higher than expected. So the first thing I'm thinking is, oh man, the markets, the Federal Reserve is going to keep raising rates and everything's going to happen. So let's get over to, we got some headlines here. Let's see, just is running, no big deal. I'm from West Virginia, so I do pay attention to that a little bit. Initially, I was from West Virginia. So let's get into this a little bit more. How are the markets reacting to this? Because my first thing is this isn't good news. Well, let's go over here. The Dow Jones is up 240 points. Not a bad thing. S&P up 39 and NASDAQ up 150. Okay, so the stock markets are liking this. Let's go over to the bond market and see what they're looking at. So we go over to the bond markets and we go up to, I'm sorry, folks. Let's go over to my bond market here. Let's see if it's up. Yes, it is up. So we go through here, the bond market, what's it doing? It doesn't really like the data, but it's not falling off a cliff because we focus in on here. So let me explain to you what you're seeing on your screen. I follow the bond market, where most of you guys are following the stock market to see how much money you made in the day and everything. I follow the bond market because I've got to figure out what's going on in the mortgage rates. So most people follow the 10-year treasury when they're in the mortgage business. Wrong. You shouldn't be following that. It's got somewhat of a correlation, but if you're in the mortgage business or you're a realtor, you should know that you need to follow the MBS market. This is right here, MBS, mortgage-backed securities. It's a bond that trades on Wall Street. This is the price of the bond. All I need you to know is all this. When you're seeing this number, I want you to just look at this number. If this number is down, that's bad. Okay? There's an inverse relationship with this number and rates. So if this number is down, rates are up. If this number is up, rates are down. The bigger the number up or down, the bigger the adjustment in mortgage rates. Let's go over and see where mortgage rates ended yesterday, and then I'll give you my analysis of what I think they're going to be right now when the market reposts. So yesterday I predicted that the markets would change by about 0.8, and I was pretty darn close. Here's where the numbers are. So what happens here is this is a report by Mortgage News Daily. What they do a fantastic job. I let them do the heavy lifting. What they do is they survey mortgage lenders all over the country and said this. Now pay attention to the criteria for these rates. You have a 740 credit score, you're buying your first primary home, and you're putting 20% down. 20%, folks. So 740 your primary home and 20% down. This is what the average rate throughout the whole country looks like. Okay, so if you're putting down less, your rate's probably going to be higher. Your credit score is less, your rate's going to be higher. This is probably one of the best rates that you could get. Think of the scenario. Almost perfect credit and putting down a chunk of money. So your rate's probably going to be this or a little bit higher. That's what we're going to focus in on there. So what my expectations are, let's get over to what the Chicago Board of Trade or the Chicago's futures market is telling us what the Federal Reserve is going to do at the next meeting. Because this data now says, oh, inflation in some sectors are a little bit harder than others. So now is the Federal Reserve going to raise rates? Is it likely they're going to continue to raise rates? Well, here's what the futures market's telling us. Now, this is the market. This is the Chicago Board of Trade right through here. Okay, so it's a reputable company. This is what their predictions are on what the Federal Reserve is going to do because this is the futures market. People are betting on, well, I'll say it this way. They're investing in this, okay? So it's more of a bet. You can see through here in the May meeting, they're saying that the federal funds rate will be 5 to 5.25. Where are we right now? We're right here, 4.75 to 5. So most likely there's an 85% chance that the Federal Reserve is going to raise rates 0.25% at the next meeting right here. The odds on this is starting to change a little bit. Maybe this is ticking up a little bit at the next meeting in July. Are they going to raise rates again or in June? The chances right now in the June meeting is 25%. This was almost nothing recently. So that's now some of this inflation numbers is now signaling maybe there's another rate hike coming. So that is basically my projections. So based on all this, what do I expect to happen with mortgage rates? Well, today alone, we're going to see probably mortgage rates, I'm going to say just flat. It might tick up just a little bit, maybe 0.02, nothing to really write home about. And then tomorrow's PCE number, if this is correct, where the PCE number, the core PCE number is coming in tomorrow, and it does come in higher than expected, you might see a little pullback in the stock market and a little bump in mortgage rates. So just prepping you for tomorrow. So I'm probably going to predict, we will be locking clients in today that are on the fence, and because we don't want to chance it, because right now everything's basically really steady. So that's where we are today, folks. I appreciate you guys watching. If you would, we got a new team member. Her name is Nicole Nark. Check out her YouTube channel as well. Fantastic videos. We're going to do a live event with her this evening to introduce her to all you guys and then answer all questions that you guys might have for us as well. So thank you so much for watching. God bless, and I'll see you later this evening. Bye-bye.